Hello everybody, this is Toni Turner and welcome to the market now as of about 11 a.m. Eastern on Friday, September 23rd. U.S. stock indexes are lower so far today but are poised to end the week higher after a three-day rally spurred by optimism that the Federal Reserve will hold off from raising interest rates at least in the near term. Now today, Twitter shares jumped over 15% to 22.82 the last time I looked, after CNBC reported that it is moving closer to a sale and that suitors for Twitter include Alphabet's Google and Salesforce.com. Now, as we usually do, let's look at our first chart that could give us some insight into the week to come. First of all, we're looking at our daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the ETF that closely follows our benchmark S&P 500 index. Now, we had an all-time closing high of the SPY on August 15th at $219.50, or about $21.95 on the S&P 500 itself. As you all know, we consolidated all the way through August after consolidating all the way through July. Then 2 Fridays ago, one of the Fed governors talked about how the Fed would probably raise interest rates, and that was the big red candle, the big green candle. Also below the 50-day moving average was the next day when Lyle Brainerd, also a member of the FOMC, said that no, the Fed wasn't going to raise interest rates. So you can see how that affected the market. Then the market literally consolidated into the Fed announcement this past week on Wednesday, and that's the green candle here. So it just went sideways, disagreeing, bulls and bear fighting, went sideways until Wednesday, and then of course gapped up yesterday just over the 50-day moving average, the green line on this screen. Now the SPY is trading at $216.57. This is pretty close to $21.65, where the S&P 500 index itself would be trading. And as you can see, the SPY did not have the strength to continue higher after yesterday's gap up. Today it's down a little bit, sitting just between the 20-day moving average, the red line you see, and the 50-day moving average. Of course, in the announcement that the Fed gave this past week on Wednesday, they did kind of indicate that we could possibly be looking at a rate hike before the end of the year, which would be no doubt the December meeting. So we're always waiting for the next shoe to drop here. So the market's like, yes, I'm happy, but I'm looking forward and I'm not so sure. We see the 200-day moving average down here, just rising slightly still, coming in at just around 206, maybe a little below that. Now, our line that we're looking at here, the consolidation that we're looking at, comes in, the bottom of this consolidation comes in at 212 or 2120 on the S&P 500 itself. And should the SPY fall back into this consolidation range and then fall below 212, that would be a definite sign of caution. Now, if the SPY pulls back 5%, say the market says, all right, I need a break here, I need a pause. A 5% retracement would take us down to about 208, which would still be over the 200-day moving average. If we get under that line, then we get down to 205 or 2050. Then we head down to our Brexit lows here. And that could get to be a little more dicey. But of course, I don't see that happening in the next week or so. So we will continue to see here. We're in wait and see mode now again as we turn and look toward the election. I believe that will have an effect on the market. I think the market will look at the election of course, we have the debate this coming Monday night. So we'll see what the market thinks of all that. And for now, we're still in wait-and-see mode. Looks like we haven't got a real definitive opinion here from the market, and maybe we'll get that this coming week. Our next chart that I'm looking at that will help us get that more definitive opinion is the iShares Russell 2000 ETF, symbol IWM. The Russell 2000 we've talked about before. This is the small cap index. And when we look at the IWM, many times will pull us will pull the broader market out of a bear market and will lead the broad market, we can call it the S&P 500, into a move down. It can act as a really good leading indicator for the overall markets, and that's why we look at the IWM. As you can see, it's been really strong. It's now trading above the red line, the 20-day moving average, its 50-day moving average, certainly above its 200-day moving average. And it has been especially strong here in the last week after the Fed announcement. Now it's hesitating as it comes into resistance here from just a few weeks ago in August at $125. Now, if you could see a monthly chart on this, you would see the all-time high was $129, $129.10. That was back in June of 2015, a little over a year ago. So we're very close to those all-time highs. The question is now, if the IWM starts to pull back in the next week, if it heads down below its 20-day moving average and certainly below its 50-day moving average, which is coming in at around 123 right now, then we need to suspect that the broader market, the S&P and perhaps the NASDAQ, they may start weakening too. So let's look at the IWM as a leading indicator. There's lots of volume finally coming into it, at least in the last week or so. Let's see if it can do that, or if it can move up here, hit 126, and perhaps keep on going up to that prior all-time high, which would be bullish for the market. So keep an eye on the IWM here for either a bullish move or a bearish move. That could give us an idea where the rest of the market will go. Our final chart today is the SPDR S&P 500 Regional Banking ETF, the KRE. Now, it has pulled back with the rest of the market in the last couple of weeks of August, down to its 50-day moving average. When I captured this chart today, KRE was trading at $42.38. The top components in the KRE are Fifth Third Bank Corp, SunTrust, KeyCorp, PNC, Financial Services, and Huntington Bank shares. Now, if you could look back to 2006, December 2006, you would see that the KRE had an all-time high back then of $51.12. And of course, that was right before our bear market financial meltdown of 2007, 2008. The KRE has done a little better since then. Now, its recent lows back here in February, when everybody made lows, was $32.63. It has rallied from there. It pulled back during the Brexit vote, which of course just about most all stocks did, rallied right back up again, and now is trading, as I said when I captured this chart, at $42.38, just trying to climb again above its 20-day moving average, nicely above its rising 50-day moving average, that's bullish, and above its 200-day moving average. Now, my thought is here, if the market believes the Fed will raise rates in December, that should be moderately bullish for regional banks because, first of all, higher interest rates benefit banks. As you know, their product that they sell is money, and when you can charge more for your product and they are charging more for money, higher interest rates help them do that. Also, regional banks are known for selling home loans to their customers. And I believe that with a really low interest rate like we have now, or even perhaps with 25 basis points tacked on, that will still help the regional banks, the low interest rate, but the fact that interest rates are rising will help them too, if you see what I mean there. So I want to keep an eye on the KRE. I will want it only if it stays above its 50-day moving average, which comes in here at about $41.50. I will keep an eye on the KRE in the coming week to see if it can move higher, perhaps back up to 43 and then even higher. Again, if it falls below the 50-day moving average, I won't be interested in it until it can climb back above. So, with all that, now on to next week's economic reports. But first, please join us this coming Monday online from 4:30 to 6 p.m. Eastern for our next session of Toni's Market Club. We'll talk about which side of the market to trade. I'll give you a mini trading lesson, and then I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. Plus, we have fun. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available a few minutes after the session ends. And now for the coming week's economic reports. On Monday, we have new home sales. Tuesday, we have the Case-Shiller Real Estate Index and Consumer Confidence. Wednesday, we have durable orders, crude inventories. Thursday, we have the GDP, jobless claims, pending home sales, and natural gas inventories. On Friday, we have PCE prices, the Chicago PMI, and the Michigan Sentiment Report. Please remember to join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.